Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index slipped below 99 on Wednesday, hovering near a one-month low as expectations of further Fed rate cuts kept pressure on the dollar. Risk appetite improved with rebounds in Bitcoin and equities adding another drag. Still, the dollar remains the cleanest dirty shirt, retaining demand in the absence of stronger alternatives. Over the next few days, DXY will track US yields closely, while renewed geopolitical tensions or tariff headlines may lift safe haven flows back into the dollar. WTI crude traded near $59 on Wednesday after sliding more than 1% the previous day. The market is caught between cautious optimism over Russia-Ukraine peace talks and persistent worries about oversupply. Investors are watching diplomatic developments closely. On Tuesday, President Putin met with a special envoy from the US administration, raising hopes for progress that could ease restrictions on Russian energy flows. Supply glut concerns continue to pressure prices. Spot gold traded near $4,205 during Wednesday's European session, pulling back from a 6-week high as investors took profits after a strong rally. The retracement doesn't change the broader bullish outlook. Expectations for a Fed rate cut next week remain the key driver, and many traders still see gold making a run toward $5,000 early next year. The recent dip reflects overextended gains and a technical pullback, amplified by a brief dollar rebound that soaked up market liquidity. Yen strengthened to around 155.3 on Wednesday. In Japan, investors continue to weigh the likelihood of a December BOJ hike. Policymakers have sounded more hawkish lately, but the market still believes the Kishida administration prefers a supportive monetary stance. Meanwhile, Finance Minister Katayama reiterated that the government and BOJ remain aligned in their economic assessment. Her remarks followed BOJ Governor Ueda's upbeat comments on Japan's outlook, noting that the central bank will carefully evaluate the pros and cons of a rate hike at the December meeting. Euro held above 1.165, its strongest level since mid-November, as traders assessed a wave of Eurozone data and its implications for monetary policy. Headline inflation ticked up to 2.2% in November, slightly above expectations, driven by higher service costs and a slower decline in energy prices. Core inflation, however, eased to 2.4%. The region's unemployment rate edged up to 6.4%, just above forecasts.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.